Hello, everybody. Welcome to another great webinar from the team at Reuters Events. In insurance, we are talking about how to strategize, how to innovate and overcome so that we can innovate on the product side to deal with all the various emerging risks that we face. And when I say various, I really mean it. We have a very broad panel today of people with what may seem like wide and unrelated backgrounds and experiences and foci or focuses, if you want to sound less weird. But the thing is, there's actually quite a bit of connecting thread in a lot of the things that we're facing as an industry in different pockets of products, of market segments, of geographies. And so I think it's going to be a very interesting conversation when we have such a dispersed way of looking at the market, yet you'll find these common threads as we think about the new kinds of risks that we're all facing and how our products and our product approach can respond to that. This is a time of change, rapid change. Unfortunately, it just doesn't seem to abate. And the thing is, for this industry, we can't pause, we can't stop. We do have to figure out how do we deal with all of these new risks that emerge. So great conversation today to dig into all that. I'm your moderator for today. I'm Brian Falchuk. For those who don't know me, I'm the author of the Future of Insurance book series and the podcast, and the managing partner of Insurance Evolution Partners. And I'm joined by a great panel today, and I'm going to introduce them in a second. But the point of having this panel, aside from sharing some thoughts with you to open things up, is to respond to the questions that you care about most. There's a Q&A button at the bottom of your screen in Zoom. Please do make use of that. Ask your questions at any point. You don't need to wait until we get to the Q&A portion. Ask away. I will be watching those and picking out great questions to pose to our panel. And that's going to be the bulk of our conversation today. And we always have way more questions than we can get to. So keep them coming. Give us the things you want us to address as we dig in today. With that, let me tell you who joins us, and then we'll hear some opening thoughts from all of them and then move into the Q&A. So we have Gary Kaplan, who's the president of the North America construction business for AXA XL. We have Sarah Jacobs, who's the vice president of personal lines development at Nationwide. And we have Aviad Pinkovetsky, who is the president of First Connect, which is part of Hippo. And like I said, very different perspectives. We've got a couple of personal lines views. We've got auto, we've got home, we've got construction, really large, complex, risk engineered construction. What could they all possibly have in common? But I think you'll be surprised just how much we as an industry are facing these common themes. So with that set up, Gary, if I could turn to you to give some opening thoughts and kick things off for us.
Hello, everybody. Gary Kaplan. I'm really excited to share some ideas with you guys over the next hour. I started a long time ago in this industry as a risk engineer, spent 10 years doing that. Then I made the move into underwriting. And it was so long ago, we didn't have personal computers when I started underwriting. We actually just used to use calculators. But over the course of time, I ended up coming to XL, which became AXA XL a few years ago. I think it was 2017. I was approached by, it was Guy Carpenter of all people, that had a weather company that they wanted to introduce me to. And I was like, man, I have too much weather risk already in the construction book, but whatever. A guy was a good friend of mine. I looked at their resumes, they're all smart PhDs. So I invited him in, ran around the office looking for some smart people to put on my side of the table. And the journey began for us, starting to talk to tech companies. It was a new thing 5 years ago. It happens literally once a week now because there's so much focus of new tech in the construction space. It's actually become overwhelming for our customers. And that's really why we invested so heavily here in the last few years at building the construction ecosystem. It's our way of kind of bringing that special sauce that risk engineering can bring to your customers. You get to discover the best things about companies and then share them with other companies so that they improve. And this was the same opportunity for us. We started to do pilots with the tech companies, with some of our customers. That was the beginning. We learned fast, 90-day sprints, boom, move on to the next thing. And we started to see there was a big opportunity where, we might be able to share this kind of information with risk managers. That's who we were really focused on at the time. So we started to build out our ecosystem. we kind of found out halfway through that the risk managers weren't the right targets for us, for this focus. It was actually the people they started to bring to our meetings, which was their innovation leads. So we pivoted pretty mightily and focused instead on building a network of those chief innovation officers, the chief information officers that are in construction companies, and got away from a focus around claims data and data specific, and really built this ecosystem for collaboration. We have a network of probably 55 of the biggest contractors in North America that meet with us almost monthly right now. We call it the Innovator Circle. It's our way of helping them adopt more technology within their companies by sharing best practices. How do they set up an innovation focus at the company? How do they get money? We've built a benchmarking service we call TAMI. It's a way of finding out where they're on the journey of adopting technology. Interesting that, there's really high scores and really low scores, and they both seem to like that, because the people with the low scores can take that to their leadership team and say, look, we're not investing enough in this new technology. There's more opportunities. So it's just been an incredible journey. Our digital platform, the second version is coming out. The MVP we kind of threw away, and thank God we didn't spend much money on it, but the pivot was pretty important. This tool that's coming out April 1st will be all around collaboration. It'll be connecting our customers with each other and connecting our customers to our tech partners. Our tech library has about 42 technologies in it that cover the entire life cycle of construction. So it's pretty cool, the amount of people that we found out there that need our help, basically finding the construction companies and helping the construction companies deal with an overload. Really, there's a giant overload of these small startup technology companies that are trying to get someone to listen to them. So, they kind of, at the end of the day, they kind of drive our customers crazy, because, there's so many opportunities to hear somebody. We started a series of tech tapas where we introduced the technology partners to our customers, very well attended. I think it's really helpful because you get 20 minutes, a small bite of tech. So I'm pretty excited about that. Kind of the next place we're going real quickly. I think the next big area for us is in the resilience and sustainability side of the house. The climate focus for the next 30 years is going to become so intense when we get closer to 2050 that everyone's going to realize, to get to that net zero commitment that all the major corporations are making right now, they're going to have to spend a lot of time and energy on construction, changing their assets so that they can get to that. There's not enough of that capability in the construction space right now. And they have the same problem as the tech people have with the climate side of the house, which is, I'm not getting enough attention. I'm not getting enough money. There's one person, there's not enough resources. So that's kind of where we're going next, which is to build this network of the climate experts. And then I think the last area we'll probably do in 23, which will be focused on diversity, equity, and inclusion. It's the same problem there within construction companies, that there's maybe one person that's not getting enough time and attention. There's no sharing of best practices. We think we can use that same ecosystem to address those other big corporate mandates. So I think that's my 5 minutes.
Sure.
Right?
Gary, I do think there's a point that you're making without making it that I think people should key in on. Is you opened with sort of a risk management and a claims mindset as what tools can we use to drive losses down, which makes total sense. There's no one in this industry that's going to say what a terrible idea, right? That's what we would think of when we think of a lot of these solutions, is better underwriting, better claims outcomes, something along those lines. But what you realize in that journey is yes to that, but really if we put ourselves in our client's shoes, and this could be an individual B2C customer, or, in your case, these multi-billion-dollar construction project, construction companies, they have totally different needs beyond the risk side. And if you're thinking about serving that more broadly, the risk improvement sort of comes along for the ride, but you're doing so much for the insured and you're more holistically engaged in moving their risk to a different place. And I think that's a tone maybe we should all be thinking about as we engage in this conversation. And I appreciate you sharing a bit about that, because it's a really neat journey, and the way that you opened up to that as you went along and realized we're thinking too small here.
Yeah, it was really kind of fascinating that, there was so much potentially good things to think about when you're doing risk selection and pricing, but no one was asking the questions because no one understood the value, and no one
Yeah.
still really understands the value of the new tech that's out there. We finally got to the point where, we were so deep into this and we started to understand it so well. We have created a couple new insurance products now to encourage adoption. That's beneficial to the risk manager, but I don't think we thought we were going to get there as fast as we did. It's kind of a leap of faith saying, I know it's got to be valuable. I know it's got to drive the loss ratio down. I don't know exactly what the number is. Kind of like cyber insurance, right? When we first started cyber insurance, no one knew where to draw that line in the sand. What's the right pricing? No one got it right, by the way.
Yeah.
We're seeing the massive shift right now in what the exposure really was. I think this is the same thing. It's kind of like our mass timber product we came out with. Everyone was looking at mass timber as frame construction, and our contractors opened up our eyes that it's actually better than frame. It's not as good as reinforced concrete, but it's in between those two. So you need to price it in between those two. And we were the first to come out with that view of mass timber, which is good for sustainability, right? I mean, it's encouraging more forestation. So I was really glad we were able to do that. And the rest of the market now is starting to follow us down that path.
Oh, that's great. More to come on your journey as we dig into the Q&A, but thank you for that, Gary. And hopefully that sparks some thoughts for our attendees watching, listening right now. Sarah Jacobs, I want to pivot over to you, VP of Personal Lines Development at Nationwide. Totally different perspective and market segment and focus, but there are some themes that pull together. I'd love to hear some thoughts from you.
Yeah, great to be here. Thank you. Honestly, if you had asked me 20 years ago when I first started my career in insurance, what area might be a really fun place to work, my answer probably wouldn't have been product, right? So I might be a little bit biased, but I have had experience in several areas of the business, from underwriting to service operations and claims. And really, personal lines product is a very exciting place to be right now. And that's really why we're all here today, talking about the pace of change in the world around us, just the rapidly evolving needs of customers and their expectations. And then couple that with all of the technology advancements, it's creating the perfect opportunity for innovation in insurance. I think one of the areas where I see a really important change, and I'm proud to be a part of, is this shift in perspective from insurance as something that is there for you after something bad happens, to this focus on protection. And can we actually prevent the losses and damages from happening? And really, again, it's technology, emerging technologies and data that are making that possible. I'll maybe just share a couple quick examples from my perspective and Personal Lines at Nationwide that kind of touch on that. And it's our Smart Ride Distracted Driving and our Smart Home programs. So as the mother of 3 teenage sons, I can attest firsthand to how terrifying distracted driving can be. But I think that's something that we can probably all relate to. In fact, Nationwide conducted a survey last year around insurance and driving, and we found that people are more concerned about distracted driving even than their price. So 83% of people said they were very concerned with distracted driving versus 73% concerned about the price of insurance. But I think it's been really, really exciting to see the impact that a program focused on coaching and awareness, like our distracted driving program, can actually have. So in less than a year, we saw almost a 10% improvement in daily handheld distracted driving behaviors from our participants. So if you just multiply that out and think about the impact that could have to our roadways and safety, it's just very exciting to think about as we add to that program. And our Smart Home program is really based on a similar philosophy. It's how can we educate and support our customers to actually avoid losses that are highly preventable, especially things like water damage. So I think a lot of people don't realize how common of a loss scenario it is to have non-weather related water damage in their homes. But at Nationwide, I know about 30% of our home claims or property claims involve non-weather water damage, with an average claim payout of about $11,000. Unfortunately, this is another area where I can speak from experience too, where it not only is it very common, but it also creates a huge hassle, right? So I was away from home for 3 days. This was a few years ago, and a small leak started in the bathroom on the second story of my home. By the time I got home, that small leak had destroyed the floors in the second story, the ceiling, the cabinets, and the floors in the kitchen below, and the ceilings and the walls and the carpet in the basement below that. So obviously I had insurance and the damages were covered, but I can assure you that I wish that back then we had the water sensors and water shutoff capabilities that we do today to prevent that small issue from turning into such a big hassle. So I think in addition to that sort of shift from a product perspective for insurance and all of the technology that's enabling it, I think we also have to talk a little bit about data. And I know kind of Gary touched on this a little bit. I think it's relatively easy for us to use data to explain the past and even to forecast the future in a situation that's pretty stable. But what we're facing right now is just massive amounts of new data and shifting paradigms all around us. And so our challenge is, how do we harness that data to not only predict, but really help create a whole new future? And so it's really about how do we quickly glean insights from that data and turn it into product innovations that our customers and our agents actually value. So as you think about that space, though, it's funny because it can honestly be somebody's full-time job or several people's full-time job, just keeping up with everything that's available in terms of data and partnerships and those kind of opportunities. So I know that for us, it's also been really important to effectively prioritize where we're investing our time and resources and pick our partners really wisely to make sure that we are aligning to our strategy and the most important opportunities. But at the end of the day, it's just a really dynamic space. And honestly, it's exciting to be a part of shaping the industry at such an important time.
That's great, Sarah. I think your point about the stability of risk is a really important one. You know, Gary mentioned cyber, and cyber is like a completely different risk every day. So maybe on like physical property-based risks like auto and home, it may not move quite as quickly. But I mean, if we just think back these 2 years, the number of shock changes to the nature of what defines claim outcomes just in that period, you know, it's one thing after the other, just dramatically changing. And when you talk about data, we can look at the sensors and the third-party data sources and whatnot today, but we don't even know what they're going to be tomorrow or what data is going to come out of connected cars 10 years from now or what have you. So do we even have the flexibility to take in a totally undefined data space? And when we're building solutions today and we don't even know really what the scope of them needs to be, going back to your point about stability, it's a tricky one. But I love that you call it dynamicism, because that's the way to engage with it, right? Is take a different attitude in the same problem.
Yeah. We spend a lot of time talking about this, how to ingest and consume the massive amounts of data. How do we prepare for that? But also the recognition that we don't even know what we're looking for in that data. We don't, that's not predefined. You could find a valuable nugget of information or something highly predictive buried deep in that data in a way that you don't expect. So if the last couple of years have taught us anything, it's to stay flexible and to really keep an open mind about how we can use data and how to change our products and evolve them going forward.
Yeah, no, I totally agree. Aviad, I'd love some perspective from you, the lone insurtech here, you know, to hear from Hippo and systems, data, flexibility, IoT, like these are all things, prevention, very much at the heart of the founding the company. So I'd love your perspectives here.
Yeah, music to my ears, and definitely happy to share my perspective. Just a bit about myself. I've been with Hippo for over 6 years now, joined at the very beginning to build the technology product and also saw how our vision and everything around it, the execution, so on, evolved along those past 6 years. So anyway, going back to the point, the point that we are trying to make, we are aiming toward at Hippo, is how to change the paradigm of insurance. Basically, how to see people thinking about it, not just as a transactional kind of interaction that is usually a zero-sum game, because usually, traditionally, the interaction with your insurance company is that you pay your bills, you pay the premium, you get quoted, you pay the premium, you pay them on renewal and so on. And then the other kind of interaction is only when you cancel, or God forbid, there is a claim and you need to get money back from the insurance company. And let's put it this way. First of all, the basic model works. Even though I'm coming from the insurtech and we are trying to improve the industry and to push things forward and to push the envelope, the basic paradigm of risk pooling that has been around for probably hundreds of years is working just fine. It doesn't really need any major disruption or anything like that. So let's put it in perspective. But we do believe very strongly that the introduction of technology can change the way people see insurance from being just a service that makes you whole again when something bad happened, into a service that is powered by technology and services and so on, that helps you to mitigate claim from ever happening to begin with, which I really resonate with what Sarah mentioned, and this has been part of our strategy for a long time. For example, we've seen, especially in the last couple of years, and we'll talk about it a bit about it more in this hour, a very broad and wide adoption of smart home technology by customers of Hippo and customers that were coming to Hippo from other companies, because people understand that technology can actually be serving them and helping them in order to take care of their home. And I still remember my own experience when I used to live in a place that we actually rented like a few years ago, and we were about to go to a vacation in Hawaii. And just the morning before we went, the water heater just bursted and everything was fine. Now, luckily, we were at home when it happened, but I couldn't escape the thought of what would have happened if it just took place 2 days after that, when we weren't home, we were supposed to be in Hawaii. And, that could have been a very difficult situation for the landlord back in the day. But on the flip side, having a water detector that allows you to know the minute there is such an event is a very easy and very effective usage of technology in order to make sure that people are aware when something like that happens. So that's one aspect. I would also add that the whole concept of insurance and the using and how to use technology is to meet customers where they are. It's not innovation for the sake of innovation. It's innovation in order to improve the quoting process, the buying process, the claim handling process, the mitigation of claims, and so on, in order to exceed customer expectations that have kind of evolved pretty rapidly, I would say, of course, in the last couple of years during COVID, but even before that, with the introduction of e-commerce and new brands all around the world in fintech and commerce and so on. So this is where we are at Hippo, and happy to share our thoughts and perspective on that.
Fantastic. I do, you didn't mention the number, but I know something Hippo has shared is the adoption rate of some of the smart home technology. So not just people who say, yes, I'll have it, but actually turn the stuff on and use it. It's 70% or over 70%, something like that.
It's
right?
over 2/3 of our customers actually opt in and activate. And to this date, we already shipped like 750,000 such devices to our customers. Which, honestly, I've seen this program from the very early beginning, from the very early days. And I've been very positively surprised by how quickly and how much of a positive traction and reaction we got from our customers. You could have argued, no, maybe it would be too complex for people to set it up, the technology barrier, the privacy barrier, and so on. I think we handled those concerns quite effectively, but at the end of the day, people get it.
This is what I want to dig into as we get into Q&A, and that's a subtle reminder for the audience. Please do ask your questions, hit that Q&A button, and we'll dig into it. But I do want to start with this notion on adoption, because they're each in different situations. Hippo monoline on the homeowner side, Nationwide multi-line, and even stretching beyond insurance as well. And then Gary, really large, complex, risk engineered stuff is kind of as far from personalized as you're going to get, but in an industry that is not known for embracing technology and new ways of working. Surprisingly, I'm not talking about insurance. I'm talking about the construction industry, but maybe the two combined is a tricky one. Yet you've all had successes with adoption, with engagement, with moving the needle, different areas to different degrees. But this is where I want to start, because I think this, call it sort of the last mile problem, is like, we get people interested, but how do we actually get the stuff in and turned on and making a difference? Whether it's changing their behaviors or catching the losses before they're out of control. So we still have frequency, but we don't have severity, or maybe we knock both of them out. Or it's things that are changing the nature of the insured's business more holistically. Gary, you've had the biggest break in speaking, so I'm going to start with you if you don't mind. But are there ways of going about this, or things that you've learned that help with getting maybe a reluctant insured to get on the bandwagon and start to see that actually this is worth me engaging in because it's going to do more than just help my insurer out? I think you're still on mute, Gary, if you switch that up.
You
Great.
hit the nail right on the head, Brian, because what we recognized pretty early on in the ecosystem development, it was all about adoption. I mean, that was the number one thing we were trying to encourage. And everything that we did was focused on that adoption. And as we got into it, we started to realize that adoption would go up if we could, in fact, find the technologies that would solve the biggest problems for the contractors. And you mentioned early on, we had a lot in common that we might not realize. Water damage is one of them for sure, Sarah, because it kills the construction site. I mean, you think about a construction site, it's not like your house. Everything's moving around. There's big machinery and equipment, and the water's everywhere. And when it flows, when it's not supposed to flow, it could flow for a long time. So we're starting to see a lot of adoption on the water because it's a big problem. And, the biggest problems are the ones where we're seeing the adoption come earliest. Telematics is another area where I literally had no idea what percentage of my fleets have telematics in construction. It's not a question we ever asked. I mean, it's still not a question that's asked in my space, in the very, like you said, the very large, complex commercial space. We went and asked 70% of our fleet has telematics of some kind. And why is that? Because it's the number one issue for them right now with the nuclear verdicts. I mean, you can't afford to get in any kind of a collision as a construction company because they come after you. Come after you hard.
Yeah.
So I think, focusing on solving the problems that are the most impactful for the contractors was the way of driving adoption. That's the complete focus of the innovators circle right now. Every session we have with them is around what problems do they commonly have, and then what's their experience been. We kind of pivoted away from the tech topics, where we're introducing technologies. Now we're using the innovator circle so that they can discuss the technologies that they've experienced. And that just speeds up the adoption because there's a real reluctance. I mean, there's still a lot of fear of data in my space. It's different, I think, in personal lines. And I'm hopeful at some point that fear of their companies having the wrong data in the wrong place will go away when they start to experience it on a personal basis. And the smarter companies have gotten over that, but they haven't all gotten over it at all.
Yeah.
So there's still, where's the data going? What's it going to do? Is it going to put me in a bad position versus a good position? So we have a long way to go to get past that. And that'll be the focus, I think, for us for the next couple of years is to keep pushing the adoption up. I think the TAMI thing that we do, the benchmarking, just opens people's eyes to all the possibilities of the tech that's out there, because we've seen it all and we've mapped it across the entire life cycle of construction, from the very beginning when they're designing the project to when they're knocking it down in the demolition side. I mean, we cut through the entire life cycle, and there's technologies out there that seem to have a big impact for those various phases of that risk exposure that a construction company is faced with. The real win for us is going to come next when we're starting to go into the owner space now, because ultimately the owners have to say, I need that. I need that water mitigation, because I actually not only will benefit from the construction being done higher quality, on time, under budget, but it'll stay as an asset when I own that building. And maybe my property underwriter will say, hey, I should be asking questions about your water mitigation in this office building. And if I have that, I ought to be in a better underwriting class, and I ought to have a benefit for the next 45, 50 years that asset's there. That's not happening yet. That's kind of getting the owners to push the adoption down to the contractors. That'll be a big win. And that's where we have to focus next.
I think that's a really interesting point, and a segue maybe for Sarah's comments, because here the people who are creating the risk are also the owners. So is that part of why you're having more success, because it's one and the same, or are there other things that you're seeing help you get adoption and engagement?
Yeah, that's a great point. So, I mean, I think it's definitely, when it comes to adoption, I mean, there's still challenges, right? That I think people are gradually becoming more open to technology and overcoming those kind of data and security concerns that Aviad kind of referenced as well. But a lot of it for us has been around good old fashioned like education and what's in it for me, right? So when we surveyed customers, we found that 66% of people had some type of smart device in their home, typically a camera, something that they can keep an eye on their pets with or whatever, but only 25% roughly even were aware of things like water sensors and water shutoffs. And even fewer, like I think it was around 7%, actually had one of those devices in their homes. So just creating the awareness that these devices are out there that can be really, really impactful and helpful. That's been a huge piece of it. From our perspective too, we also have to really partner with our distribution partners and agents and help them understand the compelling case for this and how it helps them and helps their customers, again, ultimately prevent losses. So that's been a really important part of it. I would say too, I mean, from the over a decade of learnings that we've had from the telematics program and how to get people sort of engaged in that, we've been able to apply some of those learnings to the home space. But one of the things we found with telematics was it's engaging if you can share back the data with the customer. So that's originally where our distracted driving program started, was how do we give more information back to the customer, add more value to them from this, so that it's not just about price. That's huge, but that it's not just about price, that there's something that they can interact with and learn from through that. So we've seen a very positive engagement from that perspective as well, that I think has continued to help adoption.
You made a bunch of great points. And for people who don't know, I featured Gary's business in my first book. So I feel like I'm cheating because I'd like, Gary, I know some things, but that point Sarah was just making, I know, is a piece of your value proposition. It's what you're giving back to the insureds, to the brokers. Sarah, your point on distribution, someone asked about that as well. Yes, Hippo does sell direct, at least for part of the business, but you also work with agents. Sarah, you work with agents. Gary, you work with brokers. There are third parties involved here that are heavily involved. And that's another piece of the puzzle, because you have to get them to be on board. And I've certainly heard from some agents, well, this is going to lower the premium, so my commission's going to go down, so this is a bad thing. And obviously it depends on the mindset. Others will see that maybe it's a good thing and it can drive retention and make you more valuable to the insured. But that's a whole other party that you need to engage in and get on board to get to that end insured really buying in as well. So maybe that's something we can talk about a bit more. Aviad, really quickly from you though, on adoption, what has driven Hippo's adoption? Because it is definitely, not calling anyone else out, but it's head of the pack. I think overall, we can all see that. You've had a lot of success with getting your insureds to adopt.
Yeah, thank you. Honestly, part of it was a very pleasant surprise. When we started and we built Hippo back in 2016 and we launched in 2017, our assumption was that we are very likely to hit it off with kind of the millennials and the younger generation that is a bit more tech savvy and tech focused. And that was a reasonable assumption to the day, back in the day when InsurTech was still not a thing. And I remember shortly after we launched, like a few weeks or months, we started to look into the data and we saw that the average age of a customer was well above 40. So definitely not a millennial typical customer. And then we had this kind of aha moment that even though it makes sense to think that it would be mostly, kind of a millennial younger generation product, it's actually not the case. In today's world, when my father, who is definitely not a millennial, is using texting and video messaging and so on to interact with me and with his grandkids all the time, that's a new world. And people of all ages and all walks of life, they are getting used to the fact that there are new brands, new companies that emphasize customer experience, ease of use, innovation. And as a result, in many cases, the pricing is also very competitive, but the value proposition is much more holistic. And that's a trend that, by the way, is not unique to insurance. We've seen that trend also in financial services, when there is also the trend of unbundling. It used to be the case 20, 30 years ago and more that you had your checking account, investment account, IRA account, 401k, and so on, mortgage, all in one bank. Today, you usually go to a different institution for each one of those things, and the same goes to insurance. You might have your auto insurance with Geico or Nationwide or Allstate, but then you're shopping separately for the best home insurance solution that is on the market, and you optimize for ease of use and for the technology and the innovation. So that's something that was very eye-opening for us in a good way. Another reckoning moment we had in the early days of Hippo is the understanding of how important and crucial is the role of agents. And you mentioned, you also mentioned, and you touched on the fact that there are third party involved and so on. And there is a story behind it we can also discuss separately if we have the time, but we realized very quickly that agent is a major distribution system for us. And we basically built a whole new suite of products used to quote, bind, and service those kind of policies by agents. And the biggest realization we had is that agents, at the end of the day, they're also like consumers. They want to optimize for ease of use and for making sure that they get the right coverage for their customers for the right price. So yeah, you're right. In some cases, there might be a pushback because it lowers the commission and so on. But on the flip side, if it lowers the premium, it also improves retention. It improves the odds of conversion, and you make the customer happy, which is exactly what they're, at the end of the day, optimizing for. So even though I agree, it's probably something that required more education on our side to make sure that the agents are on board with our vision and they understand how we are different. It's something that paid off big time for us. It started, we almost stumbled upon the agent distribution channel as an opportunity for Hippo. And a long story short, it became a very significant growth driver for Hippo.
Yeah, that's an interesting story in and of itself. But you're right that really this is a retention business. It's not about profit on a single policy. I mean, maybe it ends up being that way, but we are in this overall flow over time business. And actually, that's one of the questions that someone had here. Aviad, you had this point about the underlying nature of risk pooling. Like, that's fine, it works well. That's not what anyone should be trying to disrupt. It's a good principle behind insurance, but that's sort of the heart of this question is, as we get more data, more information, and maybe we're not quite there yet, but as we get to a more highly individualized premium place where we're, an N of one, a risk pool of one, what does that do to the fundamentals of insurance? Is that something that any of you is contemplating these days? And Aviad, I'm gonna stick with you because you kind of, I think you sparked the question.
Happy to. I fully agree with this hypothesis. This is something that we've been talking for a long time. I believe that the industry is probably going to move at some point from large averages into big data. And the difference is that usually actuary science is based on large averages. So if you have a large enough pool of properties over a long enough period of time, the average risk and losses that this group will experience will be consistent over time, given that other circumstances are the same. But there are two drawbacks to this approach. The first one is that the world is changing, and events that used to be once in a generation or once in 100 years starting to occur on a yearly basis. Hopefully, it won't be as bad going forward. Maybe it was just the culmination of everything with the pandemic, but it seems like it's a trend that is going to stay with us. So what it means is that the past data is not necessarily a good predictor for what is going to be in the future. The second thing is that there is a significant variance between one property to the other. They might be very close to each other, but the roof could be a completely different condition and material. They could be on a different slope, even though they're close to each other, which could completely make a difference in terms of their exposure to flood or wildfire and so on. And this is something that right now the existing models fail to distinguish. And what we believe is that by using technology and the ability to pinpoint for specific characteristic of a property, you can actually differentiate. And we actually have started to go down this path. So for example, when you get a quote on Hippo, we pull on demand satellite imagery, high resolution imagery of your property, of your specific property, not only a table about the zip code or the neighborhood or something like that, but of your specific property. And we understand what is the roof condition, what is the square footage estimate, the most recent one of your house, of your home. Do you have a pool in the backyard? Do you have debris in the backyard? Is there an overarching tree and so on? And then we are able to have a more accurate risk characteristic of your specific property, regardless of the overall data in the area. And then you can also use it as a continuous underwriting tool where you can check in on this property every quarter, every year, and to make sure that nothing has changed. Because people are not very likely to call their insurance company just to let them know that, hey, I changed the roof, I fixed the roof, I replaced the pool or something like that. But it does happen. And by the way, and then I'm going to finish and let others share their opinion on this one. But there is another play here that is not only about the risk mitigation game, it's also a retention play. And let's say, for example, that, Brian, you replaced your roof. And of course, being an average customer, you don't really bother to call your insurance company. You have other stuff to do with your life. But then for some reason, you decide to shop for one reason or the other. So when you're getting a quote from a non-Hippo carrier, you will actually get a very competitive rate because you tell them that you got a new roof. But we, as your current insurance carrier, we don't know that because you didn't tell us. But the fact that we can automatically understand that you replace the roof and give you the discount without you even asking for it is a huge customer experience improvement, and also a retention play that is going to benefit the customer and the insurance company as a whole. So that's kind of another angle for the strength of continuous underwriting other than risk mitigation.
Well, I appreciate that story because I am within the next couple of years, I'm going to need to replace my roof, and it would never have crossed my mind, despite being an insurance person, would never have crossed my mind to do that, but maybe help offset the cost of the roof replacement. So thank you for that one. Sarah, I want to jump in with you on this. Aviad hinted at the data changing, and that's something that you had teed up as well. What are your thoughts on what this means for risk pooling and the way we think about pricing and risk?
Yeah, absolutely. I mean, it's a space that is evolving rapidly, and we know that there's a huge interest from a customer perspective and more personalized rates, right? So that is one of the, I talked about the what's in it for me from an adoption perspective. That is absolutely one of the things that we focus on. So from a telematics perspective, right, it's the opportunity that a greater portion of your rate is in your control based on how you drive. And again, I mentioned it from a data perspective, just that there are incredible amounts of new data that allow us to continuously underwrite, to continuously update our understanding of the risk. And again, to the extent that we as an insurance company, if we can more effectively understand the risk and match that price to risk, that will show up in our loss performance. And again, that's something that then we can in turn pass back to the customer from a pricing perspective. So I think there is a balance in there. It doesn't disrupt the process. I think it actually strengthens it and just creates more value for customers.
Yeah, I mean, there's so many potentialities with this. And the tools are coming online now. I mean, I think probably connected car is the most ready-made one because of the kinds of data that it'll be throwing off in real time, and what do we do with that or not? Gary, I'm curious from your perspective, does any of this resonate? Because your underwriting is so different. It is more bespoke to the account. Is like I keep using the word risk engineered accounts. They are. So is this something that you're contemplating, or does it spark a different thought for you? Because risk pooling works differently in your space.
Yeah, I'd say it's way less than in the personal lines right now.
Yeah.
Because there's so much variability. You think about a construction project, there's nothing similar to it than anything else. I mean, they're all very unique. But it is starting to work its way in. I think the data is going to make a big difference. We're seeing examples of some of the things you guys talked about that we know you can put it in the home right now, but the imagery is one of the categories we look at when we do the TAMI review, and that's just getting more and more sophisticated all the time. We're trying to tie it to safety. Is there a correlation between what the artificial intelligence is seeing through the imagery with how they perform, whether it's cleanliness or whether they're tied off or whether they're using, ladders. We can start to see all those little things on a construction site real time. And it's not like they have to do it. They're already doing that. They're already taking the pictures. They're already loading those pictures in. It's just pulling in a technology that looks at those images and then works with an insurance company to say, this is a better risk because of us asking a different set of questions than we have in the past. It really hit me hard that, I think it was about two years ago, I was trying to think of why no one had looked at construction projects in a unique way. I mean, when I started in highly protected risk. I was industrial risk insurers. You probably don't even remember them, Brian, but they were like Factory Mutual. And what we did as engineers is we went out and looked, did they have sprinklers? Did they have alarms and watchmen? That was the technology 40 years ago, right? I mean, it was pretty clunky stuff. But if you had that on your asset, it was a better asset. You got into a better underwriting class. That did not exist in construction. So we created highly protected projects as kind of a leap of faith, saying we need that for construction, and they need to be rewarded because they're creating data and they're using data to prevent losses like we're talking about in the personal lines, but on the construction site. And the way of doing that is to say, all right, because I know this, I have this new set of data. I mean, it's clunkier than what you guys are doing. It's what, we're generating the data ourselves through the questions that we're asking, but we're trying to reward the customers that do that, that have that, with a better underwriting class. And I think that'll spread. We're trying to spread the ecosystem right now into other lines of business. Construction is pretty unique at AXA. We have 9 lines of business under one group, but it's a reflection of every other business in the company because they do all those other lines, right? Yeah. Property, liability, whatever it is. So trying to move our ecosystem out of construction to the rest of the company is going to be a more challenge because of distribution. They don't have as close of a connection to the customer as we do. There's, we are super close because of our risk engineers, and we can reach in there and find someone else other than the risk manager. It's going to be harder when you get outside of construction, and it's going to require a ton of education to the brokers to help us get there.
Yeah, it is. I mean, it's interesting, and the difference from personal lines as we're talking about, but even from other large, complex commercial risks, because of the nature of your very vertical specific. I mean, it's almost like it's its own insurance company serving the vertical specifically. It's really interesting. Gary, I want to stick with you as we dig into the next question, and maybe the answer is a function of having this holistic relationship from a risk and business standpoint. There's 2 different questions I'm going to package together. One is, how do we try this stuff out and evolve given the regulatory constraints? And I know, Gary, you've got less of those than the personal lines side does because of the nature of your risks. But the other side of it is, how do we test these things and grow and change given distribution constraints? That it's not just our free will to do as we please because it's a one-to-one relationship. We have a distributor involved that, they need to be comfortable. They own the customer, so to speak. So given whatever constraints we face on the freedom to just try things and experiment, how do we get some of these things designed and built and validated before rolling them out?
Well, I think the way we're going about it, it's the right legal way of doing it. I mean, sometimes you're left with only one choice, and that's what we decided, stayed within our filings. We're just basically trying to change the variability within those filings to encourage, you're either this good, or this good. And that's working really well. I'd say the part that's not working really well is the procurement side. So I think if you're very focused, like Hippo is, on one target group that you can get really focused and focused in on this one technology to make a difference. When you get in our space, we're trying to solve over 9 lines of business. So there's a lot of procurement that has to go on from that contractor with a lot of different technology companies to get to that highly protected project space. They have to go through a lot of hoops and talk to a lot of people to get that highly protected project. And sometimes it's just easier not to do it. And construction sits at the bottom of the innovation cycle, right? It's the very least innovative of all industries. So it's not their nature to do that. So I think that's going to be the hard. We have to figure out a way from the personal lines carriers to make it really easy to get on the site. And that's the part I think we're stuck with right now, that we're going to figure it out over time by doing more and more pilots and projects. But at some point, the technology companies got to come together a little bit more than they currently are, so that there's kind of a one place to go to get all of those IoT sensors that you would need on a project. I think that's going to be what we're going to see in the next couple of years. And we're starting to see it already. Some of the big, more sophisticated contractors are building their own tech companies, and they're going to be the vehicle for putting in what's required, to cover all the aspects of risk that you see on a construction project.
Yeah, the procurement challenge is real, and I think personal lines maybe has an advantage, but it also has a struggle that, I always say in commercial property, you've got facilities management people who can put the water, not just sensors, but the shutoff valves in the home. You got to get a plumber out there. Or I know, Hippo has a partnership with Lennar, for example. So you're building things into the home from the start, which is brilliant if you can get that. But in a lot of cases, can people plug a dongle into their car? Yes. Can they add an app to their phone? Yes. But as we think about more advanced sensors and sensors that don't just alert, but take action, often there's that, again, a last mile problem from an implementation standpoint that a lot of homeowners can't necessarily do. Sarah,
Nor should they. I mean,
or should they? They may create another loss.
I mean, these guys are probably scared to death if you have the homeowners putting in the shutoff valves. That could be a bigger mess, right?
Yeah.
Yeah, I would agree. That's not something we necessarily encourage, but sorry, Brian, where were you?
No. I mean, given the kinds of constraints, regulatory, distribution, idiots like me, my house is flooded twice. Once was an act of God and the other was an act of Brian. So we'll leave it at that. Yeah. Well, what thoughts do you have about overcoming some of these hurdles?
Yeah, I mean, just circling back to the question kind of around the regulatory kind of impact, right? I mean, needless to say, insurance is a highly regulated environment. And honestly, I think that's one of the things that kind of new entrants into the system have been surprised by in some cases, especially those that are a little bit outside of the traditional sort of construct of insurance, right? It's navigating that process is pretty intense. So for us, it is a constant focus to figure out how to partner effectively with regulators to bring new solutions to market, because again, it's an industry that has been relatively slow moving for a long time, and now we're trying to kind of accelerate that pace of change. And so we really need to kind of work together, because ultimately it's to benefit customers, right? And so I think big data, AI, those concepts sometimes can be a little challenging to kind of introduce through the regulation, but ultimately, again, if we're approaching it from that perspective of how can we better benefit our customers, that's where we found made some good progress. And the same thing applies with working with our agents. It's helping them understand how ultimately this helps the whole insurance equation. It really benefits the customer and creates a better experience there. That's been a very positive conversation.
Yeah, it's taking the right, not just position from a PR standpoint, but position in terms of what you're actually building. So it genuinely is for a benefit. Aviad, I'm curious for Hippo, it's not just the sensors and the like home inspection and sort of like, I forget the term you use for it, but where you can do the annual view of your house with an expert and catch the things ahead of time. But then you also were changing on the product side too. So there were a number of fronts that were new to the space. I know Asaf has been very public about, like, your fur and your bullion and your mausoleum were covered by the standard policy, but not the stuff that you actually have in your house. So I know you've tried to innovate on product as well as the tech and the services. How does the regulatory side come into play there? Because you were doing so much that a lot of it was not being done before, or not being done at scale or at speed.
Right. So first of all, you're right. I mean, we think that in order to achieve our vision of proactive insurance, there are three pillars. The first one is innovation on the insurance policy. We will talk about it in a minute. The second one is the smart home technology. And the third one is services, with having people, helping you out when stuff happens, either virtually or boots on the ground with you trying to fix and getting stuff done within your home after something has happened, or trying to prevent it from happening to begin with. Now, couple of things. First of all, on the policy itself, what we realized when we started to build the Hippo product is that many coverages and endorsements were based on how policies were created and defined in the 50s and the 60s. For example, it provided great coverage for stock certificate you might have in a safe in your wall, which I think nobody's using that, as well as fur coats, pewtables, and so on, which is not really relevant in the 21st century. But at the same time, it failed to provide coverage for stuff people actually care about, like home office equipment, adequate electronics, water backup, service line, and so on. In many cases, it was a discretionary endorsement. So it could be that your neighbor have had it, but you, because of one reason or the other, didn't have it. And the only time you came to know that you were missing this critical piece of coverage is when you actually had the claim, which is a horrible experience. Yeah. So first of all, what we did was to take a fresh look at the insurance policy and pretty much build it from scratch. We stripped it down and rebuilt it only with stuff that we thought matters. Now, I have to say that the regulatory reception has been actually quite positive to that, because at the end of the day, yes, there is some reputation about the industry being very slow and regulated and so on. Some of it is well-deserved and earned. But at the end of the day, I think the fundamental understanding we had is that the role of the regulator is to protect the customer needs. And if you come to the regulator and you have a meeting and build a relationship and you explain to them why you're doing what you're doing and convince them that this is actually something that is going to benefit the customer at the end of the day, you find the conversation to be much more constructive and reasonable than you might have feared it would be. So far, our experience, in many cases, it takes more time than we would like it to be. Yeah, obviously, we like to move fast, but at the end of the day, our experience has been surprisingly very positive on that regard.
I think that's something for all of us to remember is insurance takes a beating for being slow or boring or what have you. And, it's a played out meme. But the reality is, yes, we have regulatory constraints, but we have lots of examples of companies that are doing innovative, cool things hand in hand with regulators who are supportive of that. So we shouldn't just take that as, oh, we can't because they won't let us. Because clearly there are lots of examples from the three of you and beyond where people are doing things, even in the regulatory environment that people, say is not conducive to that. And the same thing on the distribution front. Again, all three of you work with agents and brokers. All three of your businesses are doing these things hand in hand with those partners, and they're people. So some will get it and be good partners, and some will not and will fight it, and that's fine. And you'll see that with anything you do, whether it's tech or not. But this was a great conversation. And one of the ways I know that is not only do we have a ton of questions we still didn't have time to get to, Gary, there's a lot of people who are very interested in construction, which is awesome. I think that's exciting. Usually it's personalized questions. We have tons of personalized questions too, but it's good to see people who are curious about the risk engineered space and the complex risk as well. We also have a ton of comments in the chat, including Sarah should share a direct example of someone who had a serious saving event thanks to the water sensor that Nationwide had provided and protected against what would have been a significantly larger claim in a kitchen. So yeah, for anyone who's lost use of their kitchen.
Always love to hear the stories. Yeah.
I can't thank you, all three of you, enough. Really great conversation. I wish we had more time because honestly, with the questions we've got right now is probably 2 hours just on those. And I'm sure that would spark more, but that's a great sign of how engaged the audience was. So thank you to all of you for asking your questions and your comments. Gary, Sarah, Aviad, thank you for your time today. It was a really good conversation.
Thank you.
Thank you very much.
Thank you.